Welcome back to Iraqi Dinar Alert. Today, we're diving deep into a question many of you have asked. Why isn't the Iraqi dinar listed on the Forex market? The Forex market, or FX, is the biggest financial playground in the world. Every single day, over $7 trillion in currencies are traded. But with all this action, one currency is conspicuously missing, the Iraqi dinar. So, what's the real story? Is there some big secret? Let's uncover the facts. First, let's do a quick breakdown of how Forex actually works. It's a massive global network connecting central banks, commercial banks, and retail brokers. Central banks, like the US Federal Reserve or the Central Bank of Iraq, manage their nation's currency. Then you have giant commercial banks, think JP Morgan or HSBC, that provide the liquidity, trading massive volumes and forming the market's backbone. Finally, there are retail brokers, the platforms where everyday people like you and me can trade. But here's the key. For a currency to be listed on these platforms, it has to meet strict international standards. Organizations like the International Monetary Fund, or IMF, and the Financial Action Task Force, or FATF, ensure currencies are stable, transparent, and follow global rules against money laundering. This is exactly where the Iraqi dinar hits its first roadblock. So why isn't the dinar on Forex yet? There are several major reasons, and none of them are conspiracies. The first big one is convertibility. For a Forex listing, a currency must be fully convertible, meaning you can freely buy, sell, and exchange it without major restrictions. Right now, the Iraqi dinar is a restricted currency. You can't just move large amounts of it outside Iraq. Exchanges are limited to approved banks, and there are caps on how much foreign currency, like the US dollar, can leave the country. Until Iraq allows the dinar to be freely exchanged on the open market, Forex platforms won't touch it. Reason number 2 is Iraq's exchange rate system. Iraq uses a fixed, or managed, exchange rate. The Central Bank of Iraq sets the value. Forex markets thrive on floating currencies, where supply and demand determine the price, causing it to go up and down. Since the dinar's value is fixed by the government, it doesn't have the daily price movements that traders look for. This lack of flexibility is a deal-breaker for global Forex markets. Next, we have to talk about political and economic uncertainty. Forex markets hate instability. Any political risk can dramatically affect a currency's value. Iraq, as we know, continues to deal with internal political disagreements, budget delays, and regional security challenges. This environment creates too much uncertainty for major banks and brokers, making them hesitant to list the dinar. The fourth factor is Iraq's banking system. While it's improving, it's still considered to be developing. For a long time, many Iraqi banks struggled with outdated technology, weak compliance systems, and slow international transactions. Although the Central Bank of Iraq has made huge strides in improving laws and transparency, global institutions are still watching and waiting for the system to fully mature and prove it can handle high-volume international trading securely. Finally, a major red flag for any Forex broker is a dual exchange rate. In Iraq, there's the official rate set by the central bank, but there's also a different market rate used in everyday transactions, and sometimes a parallel street rate that's even different. Having multiple prices for the same currency signals instability and creates risk. Forex markets demand a single reliable exchange rate, which Iraq just doesn't have yet. So, is there any hope for the future? Absolutely. Iraq is working hard on major economic reforms. They are modernizing their banking sector, fighting corruption, attracting foreign investors, and strengthening international relationships. If Iraq can achieve a stable, transparent, and convertible currency with a single exchange rate, the dinar could definitely become eligible for a Forex listing down the road. But it's important to be realistic. This isn't going to happen overnight. Many people hope the dinar will suddenly appear on Forex and its value will skyrocket. That's not how it works. A Forex listing is a slow, structured, and regulated process. A currency can't just flip a switch and become globally traded. In conclusion, the reason the Iraqi dinar isn't on Forex comes down to simple economics and global financial standards. It's not a secret plot. Iraq needs to achieve convertibility, adopt a more flexible exchange rate, solidify its banking system, and gain political stability. As Iraq continues its journey of reform, the possibility of a Forex listing becomes more real. We'll be here to track the progress every step of the way. Have you ever wondered why you can trade the US dollar, the euro, or the Japanese yen online, but you can't find the Iraqi dinar on major Forex platforms? It's a question many investors ask, especially given Iraq's vast oil wealth. Let's break it down. First, what even is the Forex market? It's not a single building or exchange. It's a massive, decentralized global network where trillions of dollars change hands every single day. Currencies are traded electronically across major financial hubs like New York, London, and Tokyo. The value of a currency isn't random. It's driven by supply and demand, economic strength, political stability, and overall market confidence. For a currency to get a seat at this table, it needs a stable government, a solid banking system, low corruption, and a floating exchange rate that's recognized internationally. If it doesn't meet these criteria, it's left out of the game. So why isn't the Iraqi dinar listed? There are several key reasons. The biggest one is that Iraq uses a controlled exchange rate system. The Central Bank of Iraq sets the value of the dinar. It doesn't flow freely based on market forces like the euro or the dollar. Forex markets need currencies that can move up and down with supply and demand. Since the Iraqi government tightly manages the dinar's value, global exchanges simply can't list it for speculation. Second, Iraq has strict capital controls. This means there are limits on how much money can leave the country. These rules are in place to prevent money laundering and to keep the currency stable. But for the Forex market, this is a deal breaker. Forex trading depends on the free movement of capital across borders. Without that, there's no liquidity and no trading. Then there's the issue of demand. Forex platforms only list currencies that are heavily traded around the world. The US dollar, the euro, the pound, these are used for international business, investment, and banking. The Iraqi dinar, on the other hand, isn't used for global oil sales or international trade. Outside of Iraq, there's very little demand for it. For a Forex broker, there's simply no business case to add a currency that nobody is trading. We also can't ignore political and economic instability. Forex markets hate uncertainty. Iraq still faces internal political disagreements, regional conflicts, and concerns about corruption. This kind of risk makes global financial institutions very hesitant. A sudden crisis could cause wild, unpredictable price swings, and that's a risk most traders are unwilling to take. Furthermore, Iraq hasn't fully met the requirements set by the International Monetary Fund, or IMF. The IMF has a checklist for currencies that want to be freely traded. It includes things like transparency, fighting corruption, and letting the market determine the exchange rate. While Iraq has made progress, it's not quite there yet. Another unique factor is Iraq's dollar auction system. The Central Bank of Iraq literally auctions off US dollars to control the exchange rate and stabilize the local economy. While this helps Iraq internally, it also ties the dinar's fate directly to the US dollar and prevents it from being an independently traded currency on the global stage. Finally, there's the risk of manipulation. Major brokers avoid currencies that are thinly traded or easily controlled by black market forces. In Iraq, a parallel black market for the dinar often exists, with rates that differ from the official one. This creates too much uncertainty and risk for a regulated platform like Forex. So, when might we see the Iraqi dinar on Forex? It's not impossible, but several major milestones need to be hit first. Iraq would need to adopt a stable floating exchange rate, end its dollar auction system, complete major banking reforms, and achieve greater political stability. It would also need to fully comply with IMF standards and see a big jump in foreign investment and global demand for the dinar. In conclusion, the Forex market is a powerful and exclusive club. While Iraq has incredible potential with its natural resources and modernization efforts, the Iraqi dinar is unlisted because it doesn't yet meet the strict international standards for a freely traded currency. The system is controlled, the demand is low, and the risks are still too high. If reforms continue, we might see the dinar join the global market one day. But that day isn't right around the corner. The Forex market is the biggest financial playground on the planet. Every single day, trillions of dollars are traded by banks, governments, and investors across this massive global network. It's where currencies like the US dollar, the euro, and the Japanese yen battle it out. But have you ever wondered why some currencies, despite all the hype, are nowhere to be found? Today, we're diving into one of the most talked about examples, the Iraqi dinar. Why isn't this currency, from an oil-rich nation, available on major Forex platforms? Let's break it down. First, let's get one thing straight about Forex. It's not a single building or stock exchange. It's a decentralized digital network connecting financial hubs like New York, London, and Tokyo. A currency's value here is determined by things like economic health, political stability, and good old supply and demand. For a currency to even get a seat at this table, it needs to be freely tradable. This means having a stable political system, a transparent banking sector, and a flexible exchange rate that the world can trust. If a currency doesn't meet these requirements, it stays on the sidelines. So, what's holding the Iraqi dinar back? The number one reason is that it's not a free-floating currency. The Central Bank of Iraq sets the dinar's value through a controlled exchange system. Its price isn't decided by global market forces. It's decided by policy. Forex traders make money by speculating on price movements, but you can't really do that with a currency that has a fixed price. This control is a deal-breaker for major Forex platforms that thrive on open, flexible markets. Next up are capital restrictions. To protect its economy from issues like money laundering and black market trading, Iraq limits how much dinar can legally be moved in and out of the country. While these rules are meant to stabilize their financial system, they also choke off liquidity. Forex trading depends on the free flow of capital. If traders can easily buy or sell a currency in large volumes, it's just not practical to list it. Then there's the issue of international usage. Think about the currencies that dominate Forex: the US dollar, the euro, the British pound. These are used for everything global trade, international investments, and tourism. They are the lifeblood of the world economy. The Iraqi dinar, on the other hand, is mostly used within Iraq. It's not used for international oil sales, and global businesses are making deals with it. Without widespread international demand, there's simply no incentive for Forex brokers to add it to their platforms. We also can't ignore the ongoing political and economic uncertainty. While Iraq has made incredible progress, it still faces challenges like political instability, security concerns, and an economy heavily dependent on oil revenue. Forex markets are extremely sensitive to risk. A country with unpredictable political or economic shifts makes its currency a high-risk asset, and brokers tend to steer clear of that kind of volatility. Iraq is also still working to meet standards set by the International Monetary Fund, or IMF. To be fully integrated into the global financial system, a country needs to demonstrate financial transparency, fight corruption, and modernize its banking regulations. Iraq is on this path, but the journey isn't complete yet. Until these reforms are fully implemented, the dinar will remain restricted. Finally, there's Iraq's unique US dollar auction system. The central bank auctions off US dollars to control the exchange rate and stabilize the local market. While this helps manage the economy, it also prevents the dinar from floating freely against other currencies. This system fundamentally clashes with the principles of an open forex market, where prices should be determined by supply and demand, not by a central auction. So, could the Iraqi dinar ever be listed on Forex? Absolutely, but a lot needs to happen first. Iraq would need to transition to a more flexible exchange rate, strengthen its banking sector, improve transparency, and achieve greater political stability. If Iraq continues on its path of reform, the dinar could one day join the global currency stage. For now, the Iraqi dinar remains a currency with a lot of potential but is still navigating the complexities of its own economic and political landscape. It's a powerful reminder that in the world of Forex, it's not just about a country's wealth, but about its stability, transparency, and integration into the global economy. Ever wonder why you can trade the Japanese yen or the British pound on Forex, but not the Iraqi dinar? Despite all the buzz online, the IQD remains off the major trading platforms. Let's break down the real reasons why. First, let's quickly cover what it takes for a currency to even get on the Forex market. Think of it like an exclusive club. To get in, a currency needs a country with political stability, clear financial rules, a strong central bank, and plenty of foreign reserves. It also needs to follow international standards, especially those from the International Monetary Fund, or IMF. If a currency doesn't tick these boxes, it simply can't join the global trading game. Now let's look at the Iraqi dinar. Iraq is a nation rich in oil and slowly rebuilding, but its currency is still missing from Forex. Here are the 6 core reasons why. Number 1. The dinar's exchange rate is government-controlled. Unlike the US dollar or the euro, which flow freely based on market demand, the Central Bank of Iraq sets a fixed price for the dinar. This means its value doesn't change naturally. Forex markets thrive on fluctuation, so a currency that's locked in place just doesn't fit. Traders can't speculate on it, and the market can't determine its true value. Number 2. Iraq has strict capital controls. The government places tight limits on how much money can leave the country. This is done to prevent things like money laundering and to stabilize the economy. While these rules are important for Iraq's internal security, they are a major roadblock for Forex, which relies on the free and easy flow of money across borders. Liquidity is everything in Forex, and these restrictions cut it off. Number 3. The dinar has almost no global use. Currencies on Forex are used worldwide for trade, investment, and travel. The US dollar, for instance, is used everywhere. The Iraqi dinar, on the other hand, is not used for international trade, not even to buy Iraqi oil. There's very little demand for it outside of Iraq, which means it has low liquidity. Forex brokers only list currencies that people actually want to trade, and right now, the IQD isn't one of them. Number 4. Iraq's political and economic situation is still fragile. Although things are improving, the country still faces political divisions, security risks, and heavy dependence on oil prices. Forex markets hate uncertainty. The instability creates too much risk for traders and brokers, so global platforms steer clear of the dinar for now. Number 5. Iraq has not yet met key IMF standards. The IMF has a checklist of financial reforms a country needs to complete before its currency can be fully integrated into the global system. Iraq is still working on things like improving banking transparency, fighting corruption, and modernizing its exchange rate policies. Until these reforms are complete, the dinar will remain on the sidelines. And finally, number 6. Iraq's dollar auction system. To manage its currency, the Central Bank of Iraq regularly sells US dollars to local banks. This system keeps the dinar pegged to the dollar and prevents its price from being discovered on the open market. Since Forex is all about free price movement, this auction mechanism makes the IQD incompatible with global trading. So, could the Iraqi dinar ever join the Forex market? Yes, it's definitely possible, but it won't happen overnight. Iraq would need to make some major changes. It would have to move to a flexible exchange rate, reform its banking sector, improve political stability, and gain the trust of the international financial community. The bottom line is simple. The Forex market has strict rules, and the Iraqi dinar doesn't meet the requirements yet. But with its vast oil reserves and strategic importance, Iraq has incredible long-term potential. If the country continues on its path of reform, we might just see the dinar join the world of global currency trading one day. Thanks for watching. If you found this explanation helpful, don't forget to like, subscribe, and hit that notification bell for more insights into the world of finance.